Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to go through the whole portfolio, show you all the positions we have, what they hold, what they've gained, what they've lost, because it was a request, and I haven't done this in a while where I've gone through the whole portfolio. And so we'll definitely do that today to give you an idea of what the portfolio looks like in depth a bit more. So if you're new to the channel, welcome. This is where you put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So this is last week. We closed out at $18,341.24, down $104.09 on last week, down 0.56%. The all comes in at a increase of $1,300.29, up 7.63%. That is since starting the portfolio. So with the portfolio, we can definitely see how much we've put into the account. Net deposits. This includes any referral codes coming in at $17,040.95, and the portfolio value as of May 12th was $18,418.33. So we've put in $17,000 roughly, and the current value is $18,418. And so that is the portfolio. Currently we have $18.55 in cash at time of recording. And yeah, so we'll start from the top and just go down and show you guys the positions, and I'll give you my little spiel, maybe a bit of every stock that we own. So this is the newest position, which is Brookfield Asset Management, ticker symbol BAM, closing out at $42.77. This is the newest position, down $1 from last week. We have 8 shares and total position value of $342.16. Average price of getting in is $44.20. And it holds about 1.87% of the portfolio. The latest return we got was down $8.40, down 2.4%. And since starting the position, we're down $11.42, down 3.23%. Now, why did I pick Brookfield Asset Management as the newest position? Is because they have an immense amount of AUM, assets under management, and they actually were part of just regular Brookfield, the mothership, and they decided to take this business side of things and give it a separate entity, which I do enjoy. Anything under management when it comes to assets is honestly a moneymaker in a lot of cases for companies, and that comes from management expense ratios, managing ratios, and so on and so forth. Now, Brookfield Asset Management will probably have private equity, will probably have, of course, have their own funds, and they are expanding worldwide. They are a massive company here in Canada, and I just enjoy them. And so that's why I picked it. Balance sheet looks good. Again, this is a fairly new position, but it's also a fairly new company on the exchange. And it pays a great dividend. I guess we should look at the market cap here. Market cap of $17.63 billion. PE sitting at 7.07. And the yield currently is 1.03%. Some people might think that is a low yield, but I think there is going to be massive growth for this fund itself, this company itself. Excuse me. But yes, that is Brookfield Asset Management. Next is Bell Canada Enterprises, BCE, closing out at $64.17. We hold 25 shares of this company. Total position value of $1,604.25. Average price for us is $61.86. Holds about 8.76% of the portfolio. Last week's return was down $3. Our total return since starting this position is $57.76. Now, BCE is a telecommunications company, one of the big 3 in Canada. I do own the other one, and I'm not talking about Rogers. I'm just not a big fan of Rogers, but Bell is one of those companies I do enjoy. I don't use their services, to be honest with you, but if we look at the company itself, market cap of $58.5 billion, PE ratio, so price to earnings 22.82, and then your yield is 5.81%. Now with a yield of 5.81%, that is really, really good in my honest opinion for a company that I would consider is a stable company. You know, a lot of companies that are what you would call blue chip might not pay as a high dividend like that, but with telecommunications, especially in Canada, they do run almost, not, I wouldn't say a monopoly or a duopoly. There is a third company. So I think they call it like a oligopoly. But anyways, telecommunications, strong company, especially out of the big three that are in Canada. And so that's why I own them. The next one is Bank of Montreal, ticker symbol BMO, closing out at $118.91, up 83 cents on the day, up 0.7%. This company I own 15 shares in, total position value of $1,783.65. Average price for us is $108.74 and holds about 9.73% of the portfolio. On Friday, when markets closed, total return was $12.45, up 0.7%. Total return since owning this position is $152.50, up 9.35%. Bank of Montreal, of course, is a bank and in the financial sector and is considered to be one of the big five in Canada. Now, Bank of Montreal doesn't have, they're not on headlines for the most part. Banks are typically not on headlines like TD. They kind of get clumped together and painted with the same brush. Now, when we look at this company, it is worth $84 billion. Price to earnings is 7.47, and then yield is 4.74%. So just under that 5% mark, but still a stable company. And of course, I think Canadian banks are just one of the strongest sectors. Well, just the financial sector in Canada is a strong sector, and that's why I'm kind of heavily invested in the financial sector when it comes to Canadian companies. So next position, again, is a financial stock, is a bank stock, Bank of Nova Scotia, ticker symbol BNS, closing out at $66.52, down 4 cents on the day, down 0.06%. We do have 22 shares of Bank of Nova Scotia, total position value of $1,463.44. Our average price of getting in is $70.86, and it holds about 7.99% of this portfolio. The return on Friday was 88 cents, down 0.6%. Total return since owning this position, down $95.39, down 6.12%. Now, am I going to continue to invest in this company because the stock price is lower? No, I probably won't be. To be honest with you, my focus is on the other companies, including Brookfield Asset Management, to start building that position. But anyways, looking at Bank of Nova Scotia, market cap of $79 billion, price to earnings 9.16, and you're looking at a yield of 6.19%. Now, the upside for Bank of Nova Scotia in the long term, I guess we should talk about this, is that if you run some sort of numbers, I'm sure you'll find that there is an upside to owning Bank of Nova Scotia. But again, that is very long term compared to Royal Bank of Canada, which I do own and we will talk about. There is some potential here if you look at it that way. I'm not going to get into that because this video would get too long, but look into it and run some calculations on their dividend and the growth of this company and compare it to Royal Bank of Canada, another Canadian bank stock. So next position is a US position, Cisco Systems Inc., closing out at $46.71, up 34 cents on the day. Ticker symbol for this one is CSCO. And this is one of my little tech plays. You probably hear about Cisco Systems Inc. quite a bit. It is a popular name. during the dot-com bubble, this reached a very large high and then has never recovered ever since, and still hasn't hit its all-time high. And I'm sure we'll be able to see that down at the bottom here. But in this one, we have 24 shares, total position value of $1,121.04. Average price of getting in is $51.92, and it holds about 8.51% of the portfolio. On Friday, we had a total return of $8.16, up 0.73%. Total return since owning the position is actually down $125.07, down 10.04%. Trade on the NASDAQ, of course. And no, it doesn't tell you the all-time high, but this company is coming in at a worth of, on market cap, $191 billion. Price to earnings at 17.09. 52-week low at 38, 52-week high at 52, and average price or yield for us is 3.28%, which is large for a company that's based out of the US, because I've noticed that a lot of US companies don't pay such a high dividend, like a 4 or 5%, or even a 6% that you might see common in Canadian bank stocks, but it's not a bank, so we can't compare that. And this is traded on the NASDAQ. And so that is Cisco Systems Inc. Next position is Loblaws, ticker symbol L, I believe, for this one, right? Yeah. Anyways, closing out at $123.45, down 1 cent on the day, down 0.01%. This is my best performing position, and I haven't bought it for quite some time, and I'll actually show you at the bottom there. We have 10 shares, total position value of $1,234.50. Average price of getting in is $77.18. Holds about 6.74% of the portfolio. Today's return, or Friday's return, was down 10 cents. Total return since owning this position is $462.73, a 59.96% return. Now, these guys own Shoppers Drug Mart, Superstore, and and they own real estate as well, as someone pointed out in the comment section. Market cap of $39 billion, price to earnings about 21.24, and yield is 1.31%. Not a high yield, more of a hedge against what had happened in 2020. And so I did buy this position, but I haven't bought since 2021 of December. And so it's going to be almost a full 2 years that I haven't bought a position, but I'm just keeping it. I'm not one to sell off positions. I buy them, hold them. That's the type of investor I am, regardless if they completely fall, okay? Unless it's absolutely catastrophic, then I'll probably get rid of it. Manulife Financial Corporation, an insurance company, investment company. I do believe they do hold bank accounts. I don't know if they do anymore, but they did have ATMs at one time. Manulife, $25.58 is what it closed out at, down 61 cents on the day, down 2.33%. Ticker symbol for this one is MFC, okay? We own 60 shares of Manulife Financial Corporation, total position value of $1,534.80. Our average price of getting in is $22.41, holds about 8.38% of the portfolio. Today's return was $36.60, down 2.33%. But since owning a position, we're up $190.35, up 14.16%. Market cap at Friday's close, $47 billion. Price to earnings 6.96%. Yield is 5.3%. So again, we see that around that 5% in the financial sector in Canada. A lot of people actually look at this stock as an old man stock, but I think Manulife is a great company. It might be a boring company, but it pays a good dividend. And it's not too bad for the year. You're seeing a 13.69% increase from 1 year ago. So that's Manulife Financial Corporation. The next position is Qualcomm, ticker symbol QCOM. This is a chip manufacturer in the States. Multinational company, $103.62 US, down 44 cents on the day there. We own 10 shares at $1,036.20. Now, my average price of getting in on this position is $131.58. Is it a good opportunity to buy this company now at 103? Probably yes. Am I going to? Probably not. Holds about 7.86% of the portfolio, down $4.40 on Friday. Total return since owning this position, we are down $279.62, down 21.25%. Market cap on this one is $115 billion from Qualcomm. Price earnings at 11.12. Traded on the NASDAQ, so another tech company, and it yields about 2.9%, which is great for a tech company, to be honest. Next position is another Canadian bank, ticker symbol RY, is Royal Bank of Canada, closing in at $129.89, up 5 cents, up 0.04%. We have 19 shares of this company, total position value of $2,467.91. Average price of getting in for us is $123.87, and it holds about 13.47% of the portfolio. Today's return, or Friday's return, was up 95 cents. Total return since owning this position, not including dividends, is $114.37, 4.86%. Market cap of $179 billion, price earnings at 12.34, and it yields about 4%. If you've noticed, Royal Bank is one of those companies that I'm investing on a regular basis just recently, and I'll probably continue to do that just to even out the amount of dividends we receive on a monthly basis. So now they don't pay on a monthly basis, they pay a dividend on a quarterly basis, like all the companies that I have in this portfolio, but we do receive dividends on a monthly basis from all the different companies that are paying out every quarter. So it just worked out that way. Last position we bought was in April there, end of April. We bought one share at $133.47. And so that is Royal Bank of Canada. Next one is a telecommunications company, Telus, ticker symbol T, closing out at $27.74, up 7 cents on the day. We have 53 shares of this company. $1,470 is the value of this whole position. Our average price of getting in is $28.38, so we are a bit higher than what it closed out at, and it holds about 8.02% of the portfolio. Today's return is 3.71%, up 0.25%. Total return, we are down $34.04, down 2.26%. Why do I own this company? Because it's one of the big three, and I enjoy Telus and I enjoy Bell. I just don't enjoy Rogers. And so, yeah, telecommunications, not a big selection that you can pick from. So you just go with what you have. And Telus is one of those companies that I use on probably my whole life since I've owned a cell phone. And so, yeah, Telus. Next position is TD, Toronto Dominion Bank. These guys are getting a lot of headline news. I don't know if they still are, but the most shorted bank in the market right now, and they're getting a lot of flack. They literally just had to pay, I believe the deal that they were gonna buy a US bank has fallen through, and there is a $200 million fee for canceling that deal. But they came in at $82.33. I held my first bank account with these guys. I no longer have any affiliation with TD when it comes to bank accounts or products, other than owning their stock. Up 16 cents on the day, up 0.19%. We have 17 shares. Total position value, as you can see, is $1,399.61. Our average price of getting in is $88.88. Holds about 7.64% of the portfolio. Today's return, or Friday's return, was $2.72, and total return since owning the position is down $111.43, down 7.37%. Market cap of $149 billion, price earnings at 9.95, and a yield of 4.5 almost. And TD, why do I like TD? I like their aggressive approach. They have quite the story for a business, for a bank, especially in Canada, and they are doing a heavy push into the United States. TD Ameritrade, I don't believe they own that anymore. They did sell off that asset, and I'm not sure why. To another, I can't remember what U.S. bank bought that division, but TD Ameritrade does not belong to them. But TD is one of those stories that I think you should read for a company, and how they just climbed through the ranks to become one of the top 5 in Canada, and very well known, of course. So TD, great company. I just don't hold any products with them. So last but not least, Vanguard's S&P 500 Index ETF. I think everyone should invest at least in the S&P 500. This is like the benchmark for a lot of people when they do a comparison to, when they talk about the market. Typically when people talk about the market, and they're referring to the S&P 500. When they say a 10% return or 9 or 8% return, they are referring to the S&P 500 for the most part. But why are we investing consistently in this company? This is a company, not a company, but this ETF at $99.26. We have 20 shares, total position value of $2,052.89. Our average price of getting in is $94.46, and it holds about 11.2% of the portfolio. Today's return, or Friday's return, was $56.38, 2.82%, and our total return since owning this position is $99.27, up 5.08%. We always put $25 every single week into this portfolio. The market cap on this ETF is $7.4 billion, price to earnings at 17.27, and a yield of 1.3%. Why do I have this? Well, of course, I think a lot of people who are not wanting to pick individual stocks and just want to go with an easy ETF, this is the one. Not this one in particular, but the S&P 500 ETF or the NASDAQ ETF like QQQ. A lot of people who are more passive in a sense and don't want to be the one to analyze companies typically will go with an ETF or an index fund and just set it and forget it, and set up a reoccurring investment plan and contribute to it every single week. The reason I'm doing this is to really get exposure outside of Canada, because the S&P 500 is talking about mostly the American side of the companies and the top 500, if you haven't guessed. That's why it's called the S&P 500. But sometimes it's not always 500. Sometimes it might be 498 or 502. And so that is it. That's the whole portfolio. We started this portfolio, in 2019, end of 2019, roughly. So yeah, just wanted to give you guys a deep dive into that. Longer video, probably way boring. But anyways, hopefully you guys did enjoy it. Don't forget to leave a like and subscribe, and we'll definitely see you guys in the next one. Bye.